Hi, I'm Bradley Beer, CEO of BMT Tax Depreciation. If there's one word that I would attribute to 2021, it's resilience. This year, the pandemic pushed us to our limits, but Australians have remained resolute. The property market has gone from strength to strength. National housing values rose by 22.2% over the 12 months to November, adding $126,000 to the median value of an Australian home.
Regional Australia experienced higher levels of growth compared to their metro counterparts. Over the year, the combined capital cities experienced a 21.3% rise in dwelling values, while the combined regional areas produced a 25.2% rise over the same period. It's expected that those regional markets will continue to benefit from the increase of working from home arrangements and lifestyle choices throughout 2022. 2022's housing market outlook remains positive, but the pace of growth will likely continue to lose momentum as it has in the later part of 2021. This is partially due to the fact that interest rates are eventually expected to increase, and incentives such as the Home Builder program have either expired or they've reached their minimum. The rust of construction has also caused a flow-on effect to building material shortages, pushing costs up even further. This combination is flowing through and putting pressure on the demand for housing at all levels, which is still fueling some property value growth. Investor loan activity experienced a resurgence in late 2021 after months of owner-occupier loan growth outpacing the investor market. The table started to turn midway through the year. This led to new investor loan commitments nearing record highs in October, with the monthly new lending total reaching $9.7 billion. This is the highest monthly total seen since April 2015. 2021 started with interest rates at record lows, but the later months saw fixed term mortgage rates rise, which could turn some buyers away. Meanwhile, tighter lending policies and APRA involvement could also continue to slow down housing activity in 2022. But it's hard to speculate for certain, and it is a case of waiting to see what happens with the reopening of borders and the return of immigration having the potential to give the market another boost. It's certainly been an interesting year for BMT. Despite the challenges thrown at our economy, BMT had another positive year. 2021 saw us undertake over 40,000 residential tax depreciation schedule orders across the nation, helping the Aussie investors pay less tax and save more money. One of the key challenges this year was not being able to complete site inspections in areas that were locked down due to COVID-19 restrictions. Thankfully, we are now back in full swing. Accurately preparing more than 40,000 depreciation schedules would not have been possible without proper physical site inspections, which is the key to maximising depreciation deductions while maintaining full ATO compliance. We took a deep dive into our data, analysing over 100,000 investment properties over 3 years, which BMT prepared depreciation schedules for. We found that 66% of the second-hand properties had undergone some form of additional renovation. Physical site inspections are crucial to uncovering these. Not only do site inspections find those renovations or additions hidden to the untrained eye, but they're also essential to claiming maximum deductions with full ATO compliance. A BMT site inspector will take measurements, make notes of the assets, the structure of the property, and also take photos where relevant. In the event of an ATO audit, a site inspection may be required to substantiate the depreciation claims. We continue to prove why it's always worth engaging a specialist with an average first full year deduction of almost $9,000 for residential property owners and tens of thousands of dollars more in the following years. The latest ATO data has the average depreciation claim sitting at approximately $3,800. Commercial investors and business owners have also taken advantage of depreciation throughout 2021, where we saw a record amount of tax depreciation schedules prepared for agricultural, industrial facilities, office buildings, and solar farms. We're looking forward to another great year for property investing in 2022. I would like to take this opportunity to thank our referral partners and our clients for allowing us to work with you in 2021. We look forward to working together in the year ahead.